तो बस अपना पढ़ते गया एंड एग्ज़ाम दे दिया तो आ गया।
नहीं, रैंक 1 का सपना मैंने ऐसे नहीं देखा था, पर हाँ ये जरूर था जो भी देना है अपना बेस्ट देना है।
मैं कभी सोच के नहीं रखा था कि रैंक 2 आएगा मेरा।
मेरा मानना ये है कि सबसे ज़्यादा इम्पोर्टेंट होता है कि आप अपना बेस्ट वर्जन बनो।
एक प्रॉपर बैलेंस और एक प्रॉपर शेड्यूल, दैट इज द मोटो।
The preparation would be like a prayer. Minimum level of distraction, minimum time investment, and maximum result. Please maintain complete focus. Minimum repetition. I'm not going to repeat. Approximately 65% syllabus only needs your time and attention. For 35%, you would require deep explanation. I will be starting with ICAI modules. I have marked important keywords, so we will go through the keywords. One more thing which I have noted is when teachers are explaining in Hindi, you will find it difficult to write in examination. As I said, 65% is your time investment. Simply read along the keywords and trust me, you will understand them quite clearly. I am with you. The idea is we are studying together. You have a friend with you. Since it is a no nonsense study, it will help you in speedy revision. Of course, I will be giving you study notes and we would cover revision test papers, mock test papers, and previous year question papers. So it would be 100% coverage at minimum investment of time and maximum retention. A very warm welcome, dear students. Today we are going to start chapter number 6, the Companies Act 2013. We will cover the chapters in different parts. So part 1 would be company meaning and its features. Part 2 would be corporate wheel theory. Part 3 we would discuss classes of companies under the act. Then mode of registration, incorporation of company, classification of capital. We will also discuss about shares, memorandum of association, doctrine of ultra vires, article of association, doctrine of indoor management. So I've just given an overview about the full chapter. So let's begin. The Companies Act 2013. So before we start discussing about company, let us understand business organization. The sole proprietorship is a form for doing business. Partnership is a form for doing business. Sole proprietor, one person. Partnership is generally more than one plus 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 plus. Okay. Now we will discuss about company, form of business organization. The Companies Act 2013. We know how acts are made. How do we know? We have studied Indian regulatory framework. But do you know there was an act called Companies Act 1956. The central government decided to replace the Companies Act 1956 with a new legislation, and that new legislation is Companies Act 2013. But the question is why? Whenever we change, we try to improve. So let's understand. We wanted to improve corporate governance, simplify regulation, strengthen the interest of minority investors, and for the first time legislates the role of whistleblowers and provisions relating to class action suit. Dear students, you might get question that Companies Act 1956 was replaced by Companies Act 2013 so that corporate regulations could be made contemporary. Discuss. So what are you going to write? So you are going to focus that yes, we wanted to improve, number one, corporate governance. We wanted to simplify regulation. We wanted to strengthen the interest of minority investors. And we wanted to legislate the role of whistleblowers. Whistleblower means someone who is informing about something happening wrong. So the role of whistleblower. And finally, class action suit. We wanted to create provision for class action suit. What do we mean by class action? Class 8B, class 8C. Basically, class means group of boys or girls. Okay, in the classroom we say. So class means of the same category. If 100 people have the same issue, they can jointly file a suit. So this is class action suit. So once again, dear students, corporate regulations have become contemporary by the introduction of Companies Act 2013. Discuss. So you need to write corporate governance, simplify regulations, strengthen the interest of minority investors, legislate the role of whistleblowers, and provisions relating to class action suit. The Companies Act 2013 was enacted to consolidate and amend the law relating to the companies. So consolidate and amend. So the 5 points which we just discussed. Dear students, I am trying to teach you how to write in the examinations. No teacher is trying to do this. And you people are not getting marks. So I am trying to teach you how to score marks. So consolidate and amend, 5 points we know, but why? Due to changes in the national and international economic environment. So this is the reason. And to facilitate expansion and growth of our economy, the central government decided to replace Companies Act 1956 with a new legislation. The Companies Act 2013 contains 470 sections and 7 schedules. The entire act has been divided into 29 chapters. A substantial part of this act is in the form of company rules. The Companies Act 2013 aims to improve corporate governance. So we have already discussed these points 1, 2, 3, 4 and 5. Now applicability of Companies Act 2013. So this act would govern companies incorporated under this act, which means Companies Act 2013, or under any previous company law. So also Companies Act 1956. Then insurance companies, banking companies, electric supply companies, wherever there is inconsistency with the Companies Act 2013. Let me explain you. Insurance companies have a separate act called Insurance Act 1938 or IRDA Act 1999. Banking companies follow the provisions of Banking Regulation Act 1949. and the companies engage in generation of supply of electricity, they follow the provisions of Electricity Act 2003. So, if there is a clash, which act would prevail? So, if there is a clash, they will follow IRDA, they will follow the Banking Act, and they would follow the provision of Electricity Act. These 2 points for self reading. I am going at a slow pace, but dear students, you need to study this act also in CA Inter and also in CA Final. So, this is a very, very, very important chapter. According to Chief Justice Marshall, a corporation is an artificial being, invisible, intangible, existing only in contemplation of law. Being a mere creation of law, it possesses only those properties which the charter of its creation confers upon it, either expressly or as accidental to its very existence. We all are human beings, but the company is artificial being, so invisible, intangible. You can just feel, existing only in contemplation of law, means created by law. So, creation of law. In the words of Professor Hannay, a company is an incorporated association. So, the company is incorporated under Companies Act 2013. So, incorporated association, which is a person created by law. So, basically, artificial person having a separate entity. This is very, very important. Separate entity we will discuss. With a perpetual succession, you might die, but this company which has been formed by law will not die. Perpetual succession. And a common seal. Common seal means signature. So the definition given by Professor Hannay has summed up the features of company briefly. Company means a company incorporated under this act or under any previous company law. So the act is defining by using a single word, incorporated. This is definition as per section 220 of the Companies Act 2013. Now let's understand separate legal entity. Who created the company? The company was created by the members. But the company once created, they become legally separate from the members. Do you always like listening to your parents? No. You want to say, ki, Papa, Mummy, fine, please allow us to live our way. So companies, once they come into existence, it's very clearly mentioned, it's a separate legal entity. Then perpetual succession. Change in members does not affect existence of company. So the members who created the company, they might die or they might leave the membership by transferring of shares. So even if members they die or they change, will it affect the company? No. Perpetual means mode of continuity. We want to do business and we have formed company, and this feature is very, very important. Limited liability. if the company incurs loss, the liability is limited. But if the sole proprietor incurred a loss, he has to sell his personal assets also. Liability of company is different from liability of members. Next point, artificial judicial person. Company can act through human agency only. Company can contract, sue, and be sued in its own name. So basically, whatever the human being, a person, can do, the person can sue, person can be sued, person can enter a contract, the company can also do all these things. So what do we mean by separate legal entity? Let's say there is a sole proprietor. Basically, he is equal to his firm. Now, if there is a partnership firm, all the partners are equal to the firm. Basically, promise given by the firm will be understood as promise given by the partner. In proprietorship, the promise given by the firm means the promise is given by this person. But here, as soon as the company comes into existence, they are not equal to the members. So after incorporation, company will say that I am a separate legal entity. मेरे से बात करो, हैं? उससे नहीं, वो मेरे को बनाया तो क्या हुआ? Talk to me. So as soon as the company is registered, it is clothed with a legal personality. Write these lines in the examination. So you are a human being. You are a citizen of India. You have certain rights and duties given by the Constitution. So similarly, when we say that the company has a legal personality, it means that they almost have the same rights and powers as a human being. To explain it in a better way, as human beings can own property, they can have bank account, human beings can raise loans, human beings can incur liabilities, human beings can enter into contracts. This separate legal personality gives all these powers: owning property, bank account, raising loans, incur liabilities, contracts. The same power now the company possesses, and the company says, you member, you do not interfere. How the company is formed? Basically, there is a memorandum of association which will be discussed later. Now just imagine there is A, B, C, D, E, F, G. There are few people. These few people, they were the subscribers to the memorandum of association, and they all formed a company called Zamba Private Limited. So as Zamba is formed, Zamba has a separate personality, different from A, different from B, different from C, different from D, E, F, G. So Zamba has a unique personality. Even members can contract with company. So member A, who subscribed to the memorandum, now he wants to contract with Zamba Private Limited. Acquire right against it. So A is trying to acquire a right against this company, okay, or incur liability to it, fine. for the debts of the company, only its creditors can sue it and not its members. Why? Because company they act through the members. So members, you hold a fiduciary capacity, a very honest capacity. So creditors are outsiders. Okay. So outsider will sue the company, okay. But members, you are insiders. You are the people who formed the company. And the company will act with your help. So you cannot sue. If members are suing the company, so who wronged? The members, you people did something wrong. So you have to be responsible. A company is capable of owning, enjoying, and disposing of property in its own name. Although the capital and assets are contributed by the shareholders, the company becomes the owner of its capital and assets. So imagine there are 100 people, they all gave 1 lakh rupees. So now 1 crore rupee worth of capital and assets. Basically, they mean the same. What you write here as 1 crore capital, in the asset side, you will write bank 1 crore. So assets is equal to capital. So this is owned by the company, contributed by 100 people of 1 lakh each. So although the capital and assets, so capital and assets, dear students, they mean the same, are contributed by the shareholders, the company becomes the owner of its capital and assets. So I gave 1 lakh, but who is the owner? The company. Zamba is the owner of 1 crore rupee. I gave 1 lakh, let me be owner of at least 1 lakh, please. The answer would be no. The shareholders are not the private or joint owners of the company's property. So this line is very, very important. The shareholders are not the private or joint owners of the company's property. So we cannot call ourselves as joint owners. But we all 100 people gave 1 lakh and we all formed a company. So can't we call as joint owners? Apna hi to paisa hai. The answer is no. This guy Micura thought that he is equal to the company. What do you mean by insurable interest? If there is a chance of a loss, then you can approach an insurance company, you pay certain premium, and if let's say the loss happens, this insurance company pays you. A member does not even have an insurable interest in the property of the company. Micura was the holder of nearly all shares of a timber company except one. He was also a major creditor of the company. It can be understood as a conversion case of sole proprietor to company. So sole proprietor was Micura. He formed Micura Timber Company. He basically transferred his business here. When we say he was also major creditor, it means कि M had supplied his timber to the company and the company was supposed to pay the money to M. M insured the company's timber in his own name. M insured the company's timber in his own name. I think this is the mistake. So M had transferred his business to M Timber Company. So insurance was to be taken in the name of M Timber and Company and not in his own name. The timber was lost in a fire. M claimed insurance compensation. So why are you claiming the insurance compensation, Mr. M? This should be claimed by M Timber and Company. Held the insurance company was not liable to him as no shareholder has any right to any item of property owned by the company, for he has no legal or equitable interest in them. Hence, in this case, since the timber was not insured in the company's name, M could not claim the compensation from the insurance company. Perpetual succession. So, shares of the company might change hands infinitely, but that does not affect the existence of the company. So, death or insolvency of its members will not have any impact on the company. So, company is an artificial person. So, law alone can bring an end to its life. This is for self reading. Limited liability means the debts of the company in totality do not become the debts of the shareholders. So if I had purchased share worth 100 rupees and I had paid 60 rupees, so I can be asked to pay another 40 rupees. So not to pay anything more than the unpaid value of their shares. So the nominal value was 100, payment was given 60 rupees, so 40 rupees is the unpaid value. So nothing more. What if the company is limited by guarantee? So only when the company goes into liquidation, then if I had guaranteed that I will pay 5,000, so I will pay the guaranteed amount. However, if there is an unlimited company, the liability of its members is unlimited as well. But why should I have an unlimited company? So that you can maintain secrecy. In case of unlimited company, you are not supposed to file the balance sheet. Public will not be able to see your balance sheet. So this is in the case of unlimited company. Artificial legal person. So we will discuss about the birth, about the rights and the actions. So company is artificial person. Natural birth is out of question. It is legal or judicial. Why? Because it is created by law. It is a person since it has the rights of an individual. That is the reason why we are calling the company as person. But we know that this is artificial person. So this is how this company has come into birth. Since it is a separate legal entity, you own property, you have banking account, raise loans, incur liabilities, enter into contracts. So these are the rights. It can sue and be sued in its own name. Whatever a natural person can do except be sent to jail, take an oath, marry or practice a learned profession. So hence it is a legal person in its own sense, because they cannot be sent to jail, they cannot take an oath, they cannot marry, they cannot practice a learned profession as a natural person can do. Since the company is an artificial person, it can act only through some human agency, which we call them as directors. Now, very important point is the directors cannot control affairs of the company, because the affairs of the company would be run under the rules framed by Companies Act 2013. But they are not the agents of the members of the company. The directors can either on their own or through the common seal of the company can authenticate its formal acts. Action is done by the company. Only the human agency, the human directors, they will simply put in the common seal or they will authenticate. The rules of common seal have changed, so we'll just discuss that. So where the common seal is there, you put the common seal. If there is no common seal, two directors are needed to authenticate. Thus, a company is called an artificial legal person. Common seal is the official signature of the company, which can be affixed by the officers and employees on its every document. The common seal is a seal used by a corporation as the symbol of its incorporation. But the Companies Amendment Act 2015 has made the common seal optional. This is very important. So if a company does not have a common seal, the authorization shall be made by 2 directors or by a director and the company secretary wherever the company has appointed a company secretary. So either 2 directors or 1 director plus the company secretary. So we stop today. We start with a new concept of corporate wheel theory next day. Thank you so much.